Well, right off the top, I want to remind everybody, in case you're just tuning in, USDA did announce an overnight export sale this morning. Haven't had too much of that here in the last couple of months, but we did have one this morning. What was it? Well, it was corn, and the buyer was not anybody you would know in particular because it's unknown. But it was 100,800 tons to unknown destinations, and that was for the old crop month. So we'll add that to the total, and thank goodness for anything at this time. Let's take a look at how the market is acting right now with our quotes provided by Bar Chart. On the corn, even with that overnight export sale, we're going lower and we're pushing the downward side right now. And this is ahead of the major reports tomorrow. May corn right now down 6 3/4 at $5.40 per bushel, just a tick off our low of the day. And December new crop corn down 7 3/4, and we're at $4.53.5 per bushel. Soybeans have been under pressure as well today, and look at May now down 9 3/4 cents at $13.83 1/4, and we have November at $11.97 1/4. That's down 7 1/4 cents as well. On the soy products, we have the meal market showing the May contract $1.40 higher at $3.9950 per ton. And on the soybean oil market, right now you have the May contract 138 points lower at $51.58 per hundredweight. Now, keep in mind that was actually what was pulling up the market earlier in recent days, but now that's kind of falling apart. Okay, let's talk about wheat and see what's going on here. On the wheat market, you now have the May contract 602 1/4 right now in Chicago. That would be down 14.5 cents. So we're pushing the downward side there too. Kansas City on the May contract, it's down 10.5 cents at $5.59 per bushel, and July is down 10 1/4. Spring wheat trade, we have May down 4.5 cents at 606 1/4. July down a nickel. Brian Hoops of Midwest Market Solutions joins us right now. Brian, as we get into the reports tomorrow, a lot of folks are wondering, historically, it has a tendency to make a big move one way or the other. You just don't know which way. If you're a hedger out there, how do you protect yourself ahead of a report like this? Maybe if you have a little more marketing you need to do yet.
Yeah, a good question, Marlon. A lot of people have been asking that same thing. This report generally will be a major market mover because you have quarterly stocks, you have planning intentions, and those things can really move the market here. Right now, I think the market's anticipating that the corn market has done a better job than soybeans of acquiring acres this spring. The average trade guess is only about a 2.3 to 2.4 million acre increase for corn, but the trade is sensing that with good conditions this spring, dry weather, we could see a lot more corn acres going into the ground, and that's certainly weighing on this December contract. Now, as far as managing or marketing some of your risk in here, the head of a report, an option strategy is certainly a great tool to be using because it gives you a lot of flexibility. A lot of producers, don't want to make sales right ahead of a major report because prices could move sharply higher after this report. But if you use an option strategy, whether you make that sale and reown it, or whether you just protect the price levels we're currently at and leave that upside potential available. Those are the tools that this type of situation is specifically made for. It gives you all kinds of flexibility, and that's really what you want when you go into a report like this and you have the growing season dead ahead of us.
If you look at options on a report like this, are you just looking at near-term options? For example, in this case, you're probably looking at maybe a May option or something just to get through the report on the other side.
Yeah, a lot of people have been doing that, Marlon, and that's a good point. You can do short-dated options where maybe you trade off the May time frame so that it expires in 30 days. You got a 30-day look at not only this report, but also the entire planning time frame. It'll take you until April the 23rd, and that's off of the December futures, so it'll mirror what the new crop contract is doing. And then at that point, you can kind of make decisions if your crop's gone in the ground in good shape. If depending on what prices have done, if you want to make some different marketing strategies, you certainly can. But it gives you that flexibility that you need to go through this report.
Yeah, the option premiums are a lot less because you don't have that big time component involved in there. So just something to take a look at. I wanted to point that out to everybody. Thanks, Brian. We'll be back in a moment, and then we'll take a look at our livestock trade, see what's going on there as well right after this. We're back with Brian Hoops of Midwest Market Solutions. Now let's take a look at where we are in our livestock trade. It's been kind of a meandering market here today, Brian. We have April live cattle currently 12 cents lower at 120.85. You know, we were higher just about everywhere you looked when we started the day, and now we're off our earlier highs by about half a dollar. June live cattle now 22 cents lower at 122.42 per hundredweight. On the feeder cattle side, here again, we were higher this morning. Then we sold off a little bit. Now we're firming up again. So April now at 147.40 per hundred. That would be up 32 cents. But not very long ago, it was about 80 cents below where we currently are for the low of the day at 146.62. So interesting. We went about a half a dollar lower and now bounced back again. So this is like the second time on the upside. May is 57 higher at 152.77. on the feeders. Now let's look at the lean hogs. That's been an adventure here the last few weeks. And right now you have April lean hogs 2 cents lower. That's one tick lower at $100.35. They had been as high as $100.80. So we came back about a half dollar off of that. May now up 67 though at 101.12. And let's go back to Brian Hoops. Let's take a look first at this cattle market. What do you see happening here the rest of the week? I suppose everybody's kind of watching that grain report tomorrow.
Yeah, you know, the corn market's been moving lower, and that's supported a rally in the feeder cattle. Higher cutout values are certainly attracting a lot of attention for this cattle market as well, Marlon. I think yesterday we priced in higher cash cattle trade with that big rally we had. April options go off the board on Thursday because markets are closed on Friday, and then first notice day is coming up, and that'll be on Monday for the April contract. So we could see deliveries once again, similar to what we saw in the February market, where February futures were much higher than the cash markets. We ended up seeing quite heavy deliveries, and the futures ended up falling on those deliveries. I'm a little fearful that that'll happen unless this cash market really firms up and turns higher here in the next couple days. But, the outlook is certainly higher, as show list numbers about 10,000 hits, smaller than a week ago. So we're looking at least $1 to $2 better cash trade.
All right. Well, thank you so much for explaining all that, Brian. Great information, very usable information today, and we'll invite you back here real soon. Brian Hoops, he's with Midwest Market Solutions. He's based in Springfield, Missouri. Tammy, I'll turn it back to you.